Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Constance Hunter gives us wonderful perspective this morning. Constance, how has your view on this changed with the information of the last 72 hours?
Yeah, well, so just to recap, right, it was the benchmark revisions and it was PPI. And of course, the benchmark revisions we could anticipate in advance. That those were very well forecast. And we knew that it was going to be large. And obviously, it's even larger than the 2009 benchmark revisions. And what it foreshadows is that the labor market is weaker, which is the same thing the last two data prints have been telling us. And then, of course, PPI was quite an interesting report.
Yes.
We saw goods prices see pressure and services prices soften. That's actually what the Fed sort of wants to see. I think they can look through higher goods prices. It is harder for them to look through sticky services prices. So that's quite encouraging, actually. And of course, the other thing that came out of PPI was that companies are taking this. Margins are shrinking. And if that continues, that is not a very good outlook for the equity markets.
I have the EcoGo screen up on the Bloomberg here looking at these headline numbers. Beneath that, what is most important to you? What are you going to be looking for when you begin to sort of pour through that release?
Sure. We're going to be looking through all the details of goods. And of course, it's going to be lumpy as these tariff effects get passed through. We haven't seen it in autos, for example. We did see some indication in the PPI that component parts are going up. Engines are going up. Component parts are going up. And so we do expect that pass through to come eventually. I think it's going to be lumpy, right? So we have a forecast each month of some average that we think is going to occur over the next 6 months, but very likely it's going to come in 1 or 2 month bursts, and then it's going to subside.
Does Chinese deflation affect this report, or is that just a sidebar on the other side of the world?
So that's a great question, Tom, because in the past, disinflation or deflation in China has been exported to the rest of the world. And it would be still being exported to the rest of the world, except that we have put tariffs on. And so that pass-through is not occurring.
Interesting.
And we're not the only ones, by the way. If you look globally, de minimis taxes started in force in 2024 from countries around the world pushing back on the disinflation and deflation and excess supply.
Let me ask an unfair question here. There is so much scrutiny on the Bureau of Labor Statistics, and I think what that's done is kind of gotten a lot of us to re-engage with the processes that lead to the jobs numbers that we get, indeed these inflation numbers as well. Just stepping back, how good are these numbers? How much are they telling us about the overall inflation picture?
So the robustness of the policies and procedures that all of our statistical agencies follow, including the BLS, are extremely robust. They have multiple fail-safes. And by the way, like all of us, they're always looking to find improvements. And they're always looking to say, this isn't exactly right. We need to improve this. We need to improve that. And I just want to say on the face of it, revisions are a really critical part of how data is collected and then processed over time, right? So the problem with the CPI is that it is an average basket. And what we know is that people attach to what economists call salient prices, right? So for me, it's that cup of coffee. I thought I had a vertical demand curve for coffee, that there was no price at which I would not buy coffee out in the morning. Yeah. Yes, but it turns out I do have a price. And that price seems to be...
Are you switching to Senka?
Well, the $8 latte is a hard thing to muster.
Yeah, an $8 latte is it's really tough to swallow. Yeah.
Lisa, do you want to weigh in here, Lisa, on your pumpkin latte?
It is. I know. It's very expensive.
Yeah, and are you cutting back?
Yes. See, I make it at home.
Let's go downtown.
There you go.
There's something different this year at our remembrances of September 11th. Here we see the former governor of New York, Andrew Cuomo, in conversation with Michael Bloomberg, as well as others. Mayor Adams is there.
I saw Jay Johnson, the former Homeland Security Secretary, was
Mr.
there.
Mr. Navarro,
as well.
I saw as well, and Secretary Lutnick is there. I should say that Michael Bloomberg, who has endorsed Andrew Cuomo as founder and majority owner of Bloomberg LP, the parent company of Bloomberg Radio. It'll be those conversations. It has become a rite of passage in New York. I think we need to convey that across this nation. That, as Paul Sweeney says so eloquently, the light changes. And you can barely get through it. And it gets harder every year. Navarro standing with Cuomo this morning. David, your thoughts on these images?
Yeah, I mean, we're going to see, I believe, the Vice President of the United States making his way to Lower Manhattan as well. President Trump is going to go to the Pentagon, and we see images of outside the Pentagon as well, as we kind of, again, mark the way that all of this unfolded back in 2001. So these dueling memorials taking place here on this Thursday morning. And
USA Today, I believe, has now Vice President Vance with changed plans and will go directly to Utah. I'm a bit unsure on that. We won't get out in front of that. We welcome all of you across the nation on this 11th of September. We are honored that Constance Hunter is with us with EIU as we look at the inflation and claims report. It's completely unfair, and I need to get the Jason Furman annualized statistics 3-month one. But Anna Wong had those numbers this morning, and I'm sorry, they're not 2%. This is the way it is. Do you say we're in an elevated inflation regime right now when you look at the annualized statistics?
Of course. I mean, 0.4% annualized is a bit above 4% if that number continues. Now, we expect there to be elevated inflation for the next 6-7 months or so, especially in goods. But over that time period, we do expect to see some moderation in services prices, especially housing services. And so by this time next year, our forecast for 3-month annualized core is around 2.2%, right? So very close to the Fed's target. And let's not forget that while we are seeing elevated prices and while people are attaching to salient, whatever their salient price is, right? And we saw food inflation pretty significantly up in this month's report. The overall picture is that this is really being influenced by tariffs, which will feed through, that will pass through a year from now.
Okay, Constance, thank you so much. Constance Hunter, EIU. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
This should be a 1-hour conversation. Anna Wong with a blistering essay, in the last 72 hours saying, look, the job character back 18 months is a character of recession, even though she says we may be in a new business cycle. We've got the inflation reports out as well. Anna, I've got to go to the crafting of your paragraphs in the last 7 hours or so, and you do an annualized calculation like Jason Furman at Harvard on a 3-month annualized inflation, et cetera. How bad is it?
It's the 3-month annualized core CPI is 3.6% right now.
Wow. Can you expand on that, please? It's radio, Anna. You have to. Anna, it's not a Chicago
I'm just letting
lecture.
it sink in.
You're not in Chicago.
3.6 is pretty. Yes, Tom. So 3.6% is actually the one of the highest since for over 6 months now. So I think the contour of 3 months annualized, and this is a measure that Chris Waller has said he looks at. It's basically it has troughed a couple months ago, and it's now on a rebound. And I think that what it is that I think the rate hikes in the last couple of years and the level of Fed funds rate is only sufficient to bring inflation back down to about 2.7 or 2.8%. And thereafter, it has stalled, and it's now going back up. And that's the bottom
Let me
line.
squeeze in this question, because David's got a whole sequence of them that are smarter than mine. Is 2.7% inflation life-changing for our listeners and viewers? I would suggest, Anna Wong, it is.
Well, that is actually a very fair question. So in many emerging markets, and I covered emerging markets earlier in my career, many emerging markets see 4%, 5%, 6% inflation with no problem with their economy, right? And there are many academic papers who has found that inflation start cutting into activity and people's inflation expectations once the central bank decides to do something about it. So if the Fed's inflation target is 2%, then inflation stuck at 2.7% would be life-changing in the sense that that distance, that 0.7 percentage point distance to travel, will probably means over 100 basis point of rate hike in order to get rid of. I mean, that is what the kink in the flat part of the Phillips curve is about, is that once you get through the easy part of disinflation, which was the last 3 years, you're now stuck at 2.7%. And if you really mean it to bring it down to 2.0%, you probably need to increase the unemployment rate substantially.
Anna, just confirming here, the control room got you saying that's actually a very fair question to Tom Keene. That's a rare thing to hear from a guest here on this show. I'm not sure that you're aware, Anna, of the degree to which...
doesn't give me this heat, just so everybody knows.
It's been 4 days into the week. And I don't know if you're aware of how much the note that you wrote yesterday animated the show, but Tom quoted early and often from your report on your recession call that you made here, saying the revisions in those jobs numbers confirm the labor market began to recover shortly after the Fed started cutting rates in September 24, then stalled out. Again, he said it's possible the economy is either still in recession or in the early phase of a new business cycle. It was unfair. You weren't with us yesterday, but I asked a question after reading that on air. So what? So we mark that this may have happened, may be continuing. What does it tell us overall about the state of the U.S. economy, the call that you made yesterday?
Yes, it has tremendous implications. So suppose that we are in the early phase of a business cycle. It means that the moment the Fed cuts in next week, we are probably going to see a pretty sharp recovery. But what's unique about this economy right now is there's bottling up a lot of inflationary pressure. Firms are itching to pass through these higher costs to consumers, but they couldn't so far. So they're waiting for the moment when the economy is turning to pass it through. And I think once the economy is well in the recovery phase, that is when we are going to see a lot of these tariffs pass through. And I think today's CPI report gives a little bit hints of that, which is that we see hotel prices and airfare prices go sharply up. And this is not something a recessionary economy should look like. That we should be seeing airfares and hotels plunging, not surging.
And Joe Weisenthal, folks, saw as well beef prices confirming through the roof as well. Dr. Wong, please stay with us. We have an exceptional 5, 6, 7 minutes here with Remembrance. But Anna Wong, please stay with us, and we hope to pick up this conversation depending on the comments of the President of the United States. In the last 18 months, some would argue the most influential arbiter of our market economics in America. And I want to pick up on the essay David Gura mentioned, where you talked about recession. Why can Anna Wong study a recession so acutely and with your optimism say it's a new business cycle, and I've got to wait till the Red Sox win a World Series for the NBER to formally say there's a recession? Why the delay?
Well, because usually in the late part of a business cycle, you see that small firms tend to go bust, and those small firms are very hard to capture in national statistics. So BLS use a model to forecast this. Now, we have a lot of private sector alternative data nowadays, and the data we look at is a payroll provider focused on small to medium businesses. And these businesses were showing that the last 2 years had been terrible for them. But what I've been seeing in the last 3 months, maybe 2 or 3 months, is that there is an upswing in these small to medium businesses. And in fact, our own forecast error, everyone makes errors, forecast errors, including us. And I've noticed that based on these small and medium businesses, our forecast error in the last 2 months have been consistently on the upside, which suggests to me that maybe that there is this early phase dynamics that's going on where, you see small caps and smaller business rebounding first before everything else are lifted.
And I look at the note and look at what you wrote about those preliminary revisions. You say they flag a strong possibility that the economy entered a recession last year and recovered after the Fed cut rates in late 2024. So Say Chair Powell wanders into the antechamber outside his office. There's the Bloomberg terminal. He pulls up your report. What does it say to him about perhaps mistakes made, but the path forward here? If in fact that happened, how it might have colored, if we do the counterfactual here, the decisions that the Fed's made in the months between?
I think Powell actually felt vindicated because he was the one who pushed for the 50 bips rate cut last September on the basis of the Beige Book. And the Beige Book is a bunch of anecdotes and soft data, and many people in the market discounted these soft data, saying that hard data does not is showing that things are great. Well, but the soft data in the Beige Book is saying that employment was flat and declining. Now today, the Beige Book is saying that employment is rising just slightly. So things are not as bad as last summer. Things are rising, just barely, which is consistent with payrolls around, 20,000 or 10,000 per month. So I think Powell will look to this as saying that, well, he's going to take more signals from anecdotes and talking to businesses and firms.
Anna, brilliant. And thank you so much for all of us at Team Surveillance for your work here. She's been just extraordinary over the last 72 hours. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Right now, we would digress, and we've heard from a number of economists that the airlines are sprightly. I guess the defense business is sprightly. Germany's back in business. We have truly an expert this morning. This is someone that isn't just like, what's Boeing going to do, what's Airbus going to do, but has a really encyclopedic handle on the defense business. Sheila Kahyaoglu joins us, Aerospace and Defense Equity Research at Jeffries as well. I got to ask the first question, with or Boeing? Is it finally up for Boeing?
Yeah, it's, the orders in August were great. The deliveries were out even better. So they finally seem to have a run rate of deliveries hitting their target and goal of 38 per month by the end of this year, going to 42 on the max.
I mean, it was at 140 when Sheila said buy it, and we're now popping 227. So it's back to being a blue chip security?
Boeing is a tough name. It's not one of these momentum names that you could continue to say, we're going to go from 24 maxes last year a month to 38 this year. Those are big growth rates for if you're building a widget, let alone an aircraft. So I think you have to take that into account when you look at Boeing's momentum. But they are doing the right things. They're producing aircraft better. They're finally starting to turn the corner on free cash flow. Their defense business is also turning the corner. This is a business that was losing about $3 billion last year. So we're doing better there as well.
Okay, it's good.
Sheila, we focus so much on these trade deals, but really, of course, they're more than that. And you look at sort of what's been announced, and there are many where we don't have a lot of granular detail, but they're often kind of complemented by corporate deals and purchasing deals as well. And we were talking about yesterday the involvement of the U.S. government in Intel, these other companies. What's the effect that's had, that as the president and his team negotiate these deals, often there is a component part that involves purchasing X amount of aircraft or Y amount of aircraft from Boeing or another company?
It was one of my favorite pieces we published this year on April 8th. And it was really looking at how many airplanes does it take to get to the bottom of a trade deficit. So we looked at the biggest trade deficits that the U.S. has among countries and how many airplanes they could buy per annum to offset that deficit. And sure enough, what's easier to offset a deficit than an aircraft that costs $100 million to $250 million? They add up kind of quickly. And we've seen that happen with multiple countries and some of Boeing's largest orders this year.
Can I ask a dumb question? That was brilliant what you just said. Apple iPhones are $1,500, $2,000, but nobody spends that. We go to our phone carrier and we do a monthly plan. When you buy a Boeing 777, do you buy it with a lump of $100 million, or are they doing a monthly plan?
No, it's
just like my iPhone.
When you put in an order, usually it's 5% down, but you buy an aircraft upfront when you receive
you
the
pay cash.
Yes, you have delivery, whether you finance it or lease it. You are paying for the aircraft upfront.
I'm curious
on delivery. Sorry.
I'm curious sort of how the administration's approach to defense has changed it on the industry side. So Pete Hegseth running the Department of War, as it's now being called, at least by the administration itself. We've heard so much talk about new missile defense systems and the like. We famously, it's hard for the government to pivot. It's hard for the Pentagon to pivot. Is that happening now? Is it underway? Are we at a point where, in terms of the weapons and programs that they're focused on, they're going to be different? Where are we in that process?
I think that's where I've been a little bit surprised. So when Golden Dome was first announced in January, it was sort of this concept. No one knew what it was. No one still knows what it is. But it's going to be a $175 billion missile defense shield system encompassing all sorts of threats. And fast forward 8 and 9 months, we're now at the stage where we have to spend $25 billion. It's in the reconciliation bill by 2026. So the government has to essentially allocate the 5 large defense contractors and a bunch of small ones, $25 billion. And if you think about the defense budget, yes, it's $1 trillion, but really the allocation to R&D and procurement dollars is around $400 billion. So $25 billion actually increases their spending and potential. So Golden Dome is the contract. Our favorite name in defense is LHX. Another name we like is Leidos. It's IT services. We hosted LHX's CEO last week at our Jeffries Industrials Conference, and they're putting in RFP. It's not even an RFP process. The government's saying, what can you demo for me when? Come in and let's see what you got.
We're going to have to go in a moment here with a huge news flow today. As we speak, the ECB comes out with their headlines. There's no rate change. We'll have Lagarde's press conference. But I'm looking at nominal GDP, the inflation plus growth estimates out there that are tepid as well. With all your expertise, Sheila, do you believe that Germany will actually spur defense spending and a nominal GDP oomph in Europe?
I was in Europe 3 weeks ago. I met with 16 clients, the equivalent of their Labor Day weekend. That does not happen in Europe, a defense analyst going to meet with 16 investors. They've usually been hands-off defense, but all I heard about was defense. So yes, I do think that the NATO countries are going to actually increase their spending. Historically, 50% of that has come back to U.S. contractors. Let's say if it's even 25%. That's $280 billion additional dollars to the U.S. contractors.
You believe in this story? Wow.
It's happening. I mean, we're seeing orders from countries like Serbia to Elbit that Serbia has never been a country to order $2 billion of equipment.
Don't be a stranger. Sheila Kahyaoglu, thank you so much. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Heath Terry's got the most important job in tech. He's a legend on Wall Street, and he manages the technology analysis of Citigroup right now. You had your soiree a few days ago. What was the biggest surprise for you at that event?
Look, I think the biggest takeaway, we had 2,000 people here in Midtown, over 250 company management teams, 40 private AI companies that we hosted across a number of sessions and tracks. And I think the thing that everybody walked away from was this sense of urgency around artificial intelligence and just the pace of things.
The pace of it.
It is, there are comparisons, and Gersh and I were talking in the green room before this, there are comparisons being made to sort of prior cycles and technologies that we've been through. And where all of those comparisons fall flat is just the speed that this is moving at. And I don't think anybody walked out of that conference without feeling that.
Did you fire Tyler Radke 2 days ago when he got Oracle wrong? Heath, I've never seen this.
Look,
I've never seen a jump in a blue chip stock like Oracle.
Yeah, look, I'm right there with you. I've never seen anything like that. Tyler's a fantastic analyst.
He's medicated.
I know, as an analyst who's been doing this for like 25 years, you get them wrong. I've certainly gotten plenty wrong in my career.
I got goosebumps right now. I mean, I know it's a brutal day for the nation with the FBI speaking right now, but to have Kirsten Distenfeld and Heath Terry and David, when we invented this is what it's about.
You're jealous that you weren't in the green room when they were talking.
This out of Alabama with a slide rule he got from Werner von Braun, and it was before Excel spreadsheets when Heath was doing this. Continue, David.
Heath, let me pick up on the surprise that Tom's talking about, and you're picking up on with those Oracle results. put them into the broader picture here. What does it indicate about the speed, the trajectory that we're on, that we saw really such exuberant growth there in Oracle as it's changed kind of its tack more broadly?
Well, look, I think in that bigger picture, it is the combination of what we saw from Oracle, what we saw from MongoDB, what we saw from Snowflake. This AI moment that we're in is moving up the stack, right? This was an NVIDIA, Amphenol, Arista Networks sort of thing as we did the picks and shovels part of this, and now we're moving up the stack to the data layer, the consumption layer, and so anything that's sort of leveraged to consumption.
Right.
We saw this in Microsoft's numbers back when they reported their June numbers. Anything leveraged to consumption is seeing the kind of benefit that you saw out of Oracle. The reason Oracle had such a big reaction to it is because it is more of a surprise when you see it out of Oracle than it is when you see it out of Microsoft.
And we saw Microsoft doing this big deal with a Dutch company this week, another kind of AI adjacent.
You can't keep up with it. Mistral, they're doing ASLM did a thing with Mistral of France to keep them away from the Americans. What is the behavior of the executives? Are they like frenzy exuberance? Are they measured? What's the actual demeanor?
Yeah, I think frenzied is probably a lot closer than sort of measured, right? No company wants to be left behind in this. This is a technology that is going to reorder the competitive stack across every industry. And so no board, no CEO is sitting there saying, you know what, let's play wait and see on this. And the ones that are probably going to regret it. We have a generation of leaders in office now that have been trained on the innovator's dilemma, and no one wants to be the next one of those companies left.
We are honored that Heath Terry of Citigroup is with us. I made note of, and actually I think it was Tyler Radke that sent me some research on this, but in a very important, visceral Citigroup meeting on all this technology at hand. When you look at the companies and the executives as well, they're all generally younger. They've seen cycles of that. They revere Steve Jobs and others, Teradyne, Teledyne, names that are ancient history. But this is the new. Which company has the best model? When you talk to the, 87 analysts that report to you, which company right now is doing it best for Heath Terry?
Well, look, I think if you look at the public companies that are out there, and I'm assuming that's what you're talking about, the companies that have the most leverage to this are the companies that are providing the models and the tools and the infrastructure for this. So Microsoft's obviously at the top of that list. Alphabet, Google is very close to the top of that list as well. And then you start to see some of these neo clouds that are emerging, companies like CoreWeave that are really providing a lot of the capacity and benefiting from NVIDIA's willingness to supply these clouds with the chips that are in such short supply.
David, ask a question because I got a rude follow-up. I want Heath to stay around.
Where are we in terms of domestic production for those chips? Of course, the swirling story here in the conversation about trade policy has been about NVIDIA, about the export of those chips, but also just about the need to manufacture these high-end chips here in the United States. How do you assess the progress the country is making in pushing ahead to that, which I know will take an ample amount of time, shall we say, to get up and running?
Look, we have capacity in the U.S. From TSMC's investments in Arizona. So you're starting to see that happening. We're still a very long way away. And what's perhaps even more important than the production capacity is the talent that's needed to produce those chips. Most of that cutting edge talent
my question.
is still sitting in Taiwan. And that's something that we clearly have to invest in.
I got two questions here. And let's pretend you're in the office with Ms. Fraser and she's just grilling you. Why in God's name is Lisa Mateo's electric bill going up to pay for fancy tech people's AI development? Discuss.
No, look, that is going to be a huge challenge for the development of this. The utilities, the regulated utilities, are going to have to figure out how to divide this because there's a big difference between the electrical demand that you're seeing for AI and the trends that we were seeing in overall efficiency and power demand. And if this is going to be a cost that is driven by AI, driven by data centers, then it's going to be a cost that needs to be borne by those data centers. And by the way, they've got the capacity to be able to do it.
Back to John Reed and Walter Wriston, you people owned International. Do you have any studies that show that we can develop many thousands American manufacturing forces to do what they do in Asia? Or does Citibank, did you just assume that we're going to we're going to import Asia manufacturing skill sets. How are we going to do this?
Look, I think it has to be both. I think you have to train people here at home, and I think you have to import the talent from abroad. There is no way that you can get people up to speed as fast as they need to be to meet the moment that we're in right now. So that means having the kind of immigration policy, having the kind of active effort at bringing that kind of talent into the U.S., but then you also have to make the investment in the people here as well.
Talking with Heath Terry, head of tech and research at Citi, as we watch that press conference in Utah wrap up again with the head of public safety in Utah, the FBI special agent in charge, and the headlines from that update on the assassination of Charlie Kirk are the police have been able to track the movements of the shooter involved. They have video that they're going through. There's also solicitation there at that news conference of video and footage, photos from the event. They're trying to piece together what's happened here. Of course, we'll keep tabs on that over the course of the day as we follow that story and keep you apprised of the memorials that are ongoing in Northern Virginia and Lower Manhattan. Heath Terry, let me go back to that conference you mentioned at the top, because I want to get a sense from you of how the conversation has changed or is changing. There was a moment when I think a lot of executives knew they had to do something with AI. They poured a lot of money into that effort, building up their capacity to do it. Is that still where we're at, or are you finding that more and more executives have a feeling about how to more narrowly tailor AI to the work that they're doing day in and day out, such that it's actually making a difference in terms of their productivity and what these companies are able to do?
Yeah, I think we're somewhere in the middle of those two. You're still seeing this effort to really put a lot into proof of concept to try and bring these things on. At the same time, we are beginning to see sort of the proof of concepts go into production, and it is having an impact. You look at some of the efficiency announcements that you've seen, hiring starting to slow down as companies sort of take a break, particularly in areas like code development and customer service, take a break to figure out what they really have and what they need. As we get through this, our view on this is that if you make people more productive, particularly code developers, you're going to want more of them, not less.
I got one final question. Sure. Tyler Rickey, how did he get this across your desk? He has a 410 target on Oracle, which I believe is top of the reset here. September 9th, September 10th.
Yeah.
How does that work? Does a securities analyst have to get approval from you on a price target?
No, they don't.
They
Tyler's independent. Yeah.
He makes it up in a bar downtown somewhere.
We got to get Tyler in here.
Yeah.
We're talking so much about him. I feel like he's got to,
Tyler's just downtown. I'm sure he'd love to come in.
Does Alabama have a football team this year? I'm not sure.
We'll see this weekend. So I will be in Tuscaloosa. So I'll let you know.
You will be in Tuscaloosa. We need a report.
The tide is going to roll.
Heath Terry will be in Tuscaloosa. Thank you so much. He's with Citigroup, driving all of their technology coverage.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.